Hey everyone, welcome back to Corporate Decoder. Today we're cracking open a finding that might seem dry at first. Think of it as a real estate income trust. Doing a little dance with unregistered shares. Trust me, it's more interesting than it sounds, especially when we start talking about where your money might be going. If you are finding these deep dives into corporate financials accessible, make sure you are subscribed. We also have a Discord community linked in the description below. So what's this all about? This report, filed July 1, 2025 by Ares Real Estate Income Trust Inc., is letting us know they've been selling shares without registering them in the usual way with the Securities and Exchange Commission. They use something called Regulation D, which allows companies to sell securities without all the red tape under certain conditions. Think of it like a VIP pass for investors, but it also means less public oversight. Specifically, this happened between June and July of 2025. Ares Real Estate Income Trust sold these shares without registering them, meaning with a special exception. Let's jump into the numbers. They issued 1,065,202 Class I PR shares, bringing in gross proceeds of $8,190,837. That's over $8 million. It's important to note that the sale of these shares includes activity from their distribution reinvestment plan. Now, let's put this into perspective. What does issuing over 1 million shares mean and raising $8 million? It means the company is bringing in capital money, but it also means that existing shareholders' ownership is being diluted, meaning each share now represents a slightly smaller piece of the pie oft-on. Ares Real Estate Income Trust seems to be actively raising capital through these unregistered sales. While this can provide them with funds for investments and operations, the key risk to watch is how effectively they deploy this capital. If they make smart investments that generate strong returns, shareholders could benefit in the long run. However, if the investments underperform, the dilution of ownership could outweigh any gains. Keep an eye on their future filings to see where this money goes and how it impacts their overall financial health. Is it fueling growth, or is it just keeping them afloat? That's the question we need to answer if we want to become investors. Alright, that's our breakdown of Ares Real Estate Income Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Do not forget to check out the Discord in the description. Thanks for watching. See you next time.